Gold is everyone's first choice historically, but when retail run starts and gold is gone overnight, silver will be next, and silver will be gone in the blink of an eye. So I like this graphic. Here's what it is. This big cube here, this is how much silver is above ground, but the vast majority of it is used in stuff, equipment, electronics, machinery, art, jewelry. It's like used, okay? This tiny little cube here is the amount of silver that is tradable that you can buy and sell. Whereas here's the comparison for gold. So of the above ground gold, obviously there's less gold above ground than there is silver, like we all know that. However, a fairly large percentage of that above ground gold is tradable, right? So that's why this cube is almost as big as the other cube. However, look how tiny the tradable silver cube is. It's much smaller than the tradable gold cube. So there is a lot less silver than people think. Silver will be gone in the blink of an eye. Hey, Gold Silver family, Alan Hibbert here, and I've got another exciting update because as I'm sure you're all aware, the price of gold and the price of silver have been absolutely off the charts lately. So I want to tell you everything that's been happening lately, and hopefully we can predict where things are going in the near future. So let's start with the price of gold. The price of gold, we're up around 23.45 as of this recording. And as we zoom out and look at the 3-month chart, don't forget, back in February, we were below 2000. We were below 2000. We're up over 23.40. So that's a gain of about 17% in like 2 months. I mean, that's kind of incredible. So if gold continues to gain 17% every 2, or let's call it 4 months because we're in April, that's a gain of over 50% in a year, 50%. So again, if that trend continues, we could be looking at $3,000 an ounce gold by the end of this year. That's insane. Okay, what about silver? Silver right now at $27.94. It was over 28 just a few moments ago. And again, early in February, silver was down at $22 an ounce. So gaining $6 an ounce, that's a gain of about 27%. So gold was up 17%, silver up 27% in just a couple of months. So again, if that pace continues, silver could double by the end of the year. Double where it started. So that's $44 an ounce silver by the end of the year. Do I think that's going to happen? I don't think it will happen, but of course it could, right? A year isn't that long. You know, if we're talking about a 10-year trend sustaining itself, that's much more unlikely. So things are looking pretty good for both metals right now. And one of the main stories I want to highlight here is Costco is selling up to $200 million in gold bars per month. Okay, so some of you have seen a story like this back when we heard that Costco announced they had sold over $100 million in a quarter. Okay, that was Q3 last year, $100 million in a quarter. Okay, we're talking $200 million in a month. So that's $600 million in a quarter. So their pace of sales could be 6 times higher now than it was 6 months ago. 6 times. That's insane. So we are seeing massive demand from retail investors. They're buying up gold as fast as they're allowed to because Costco sets limits per customer. So this is absolutely a massive trend that everyone needs to pay attention to. The retail investors are starting to pour in. Here's a tweet from Charlie Balelo. A Wall Street Journal analysis found that a commonly purchased basket of supermarket goods has increased in price by 36% over the last 4 years. This is much higher than the US government CPI figures, which show food price inflation of 25% over the last 4 years. So these numbers are staggering. Even the official government figures are staggering, 25% in 4 years, but an independent analysis found that it's 36% over the last 4 years. And this is probably the type of thing that is driving all these retail investors to buy gold from Costco because the prices of food are just out of control. The prices of everything are out of control. And you might ask yourself, okay, 36% in 4 years. Did gold return 36% in 4 years? Well, I put a chart together from the last 4 years and gold is up 42% in the last 4 years. So groceries up 36%, gold up 42%. Gold is doing better. Gold is keeping up with inflation. And this went from April 1st of 2020 to April 1st of 2024, so about a week ago. So gold is preserving purchasing power. Wonderful. Another trend to be aware of is that Wisconsin signed into law a bill that will formally end sales tax on gold and silver. And this might seem like a very minor thing, but it's part of a much bigger trend of states' rights and allowing individual investors to essentially buy gold and silver without being taxed so heavily or penalized in other ways. So this is just something to be aware of. And this is a response to an overwhelming groundswell of grassroots pressure. Okay, so this isn't a top-down thing where some bureaucrat thought it would be a good idea to score points with voters. This is a groundswell of grassroots pressure. This is citizens from the bottom up demanding that their elected officials allow them to buy gold and silver without paying sales tax. It's kind of amazing that we're at the point where that even has to happen, but it's happening. So it's a trend to be aware of. Similarly, in Utah, gold and silver have come to the rescue. Governor Spencer Cox authorizes gold and silver to protect state funds. The Utah treasurer can now allocate up to 10% of state reserves to physical gold and silver, safeguarding against inflation and against financial instability. So this is another state that's not just guaranteeing rights for the citizens, but also guaranteeing rights for itself. So the treasurer can take state funds and allocate it to precious metals. That's awesome. Also, the whales are experiencing some pretty big movements here. Hong Kong seizes over $10 million worth of gold disguised as machine parts in a record smuggling bust. Okay, so let me give you some details here. 146 kilograms of gold worth more than $10 million were found on a plane headed to Japan, disguised as parts of 2 air compressors. There have been at least 2 other major gold smuggling cases in the city this year as the commodities prices hit record highs. Okay. This is interesting for a number of reasons. Number one, somebody, for some reason, converted more than $10 million worth of gold into fake machine parts to get them from country A to country B, right? Who knows where they started or where their final destination is. Hong Kong seized it. It was on its way to Japan, but who knows where all the different points are along the route. So somebody converted $10 million of gold into these fake machine parts. That's interesting in and of itself. 2, it was effectively smuggled, right? It was smuggled and it was caught. So in order to go through a risk like that, where you could potentially lose everything, you've got to place a pretty high premium on getting that physical gold into your possession wherever you are in the world. Okay, that's a second interesting thing. Third, there have been 2 other major gold smuggling cases. So that means there's at least 3. So more than one person is trying to do this. More than one person is putting that high value on getting physical gold into their possession. And you've got to wonder how many smuggling attempts have succeeded that simply weren't caught. So this could be a pattern that's emerging. And again, we're only in April. So this is roughly 1 attempt per month is getting caught. How many are going through undetected? 4, if you had $10 million worth of gold and it was seized and you just lost it all, are you going to just give up and say, oh, well, I tried? Probably not. You probably have a $1 billion portfolio and you're probably going to seek to replace this gold by buying at the market rate until you can maybe somehow go through legislative action and get this back somehow, hopefully. So I'm expecting that whoever owns this gold is probably going to be buying at the spot price to replace this portion of their portfolio. So I would expect a lot of buying pressure from this whale, just like we're seeing buying pressure from retail, just like we're seeing buying pressure from the state of Utah and all the residents in Wisconsin and basically everywhere. A lot of people are going to be buying gold right now. Also, countries are buying gold. China, PBOC, buys gold for 17th month as prices hit a record. China's gold reserve rose to 72 million troy ounces, and gold hits a record on rate cut expectations and central bank buying. Okay, so China's central bank purchased gold for its reserves for a 17th straight month in March, extending a buying spree that has helped the precious metal surge to a record. So China's central bank is buying a ton of gold, literally more than a ton, many tons of gold. And something I want to highlight here is global central banks led by China and India, keep that in mind, India, we're going to talk about India in just a second, continued adding to their gold reserves in February, marking a 9th straight month of growth, according to the World Gold Council. And another interesting note here is that this week, U.S. Treasury Secretary Janet Yellen visits China. Okay. So Treasury Secretary Janet Yellen visits China. We actually have a photograph of this moment, and we have some sneak peeks of some audio that happened when Janet Yellen met Xi Jinping. Here it is. They met together, and Janet Yellen said, "Please buy something from us other than Treasury bonds." And Xi Jinping said, "Okay, we'll take your gold." Okay. All right. A late April Fool's Day joke. But seriously, I mean, think about the trend that's emerging here is, I mean, the US really isn't producing anything other than inflation and exporting it around the world. And China, as well as many other countries and banks and investors, are figuring that out and buying the real stuff, precious metals. So this is a massive trend, the East-West dynamic. We will see how it plays out. So I mentioned India a moment ago. I said we're going to talk about India. Not only are they leading the world's gold buying spree, but they're also making records with how much silver they're buying.
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, GoldSilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making GoldSilver.com your dealer, and now back to the video.
So India imported over 70 million ounces of silver in February. That's over 8% of the global yearly mining production just in 1 month. Okay, so think about that. So if India imports 8% of the yearly mining production in a month, if they sustain that for the full year, what are we talking about? Multiply it by 12, that's 96%. Basically, it's 100% of all the silver that's going to be mined in 2024. So if India continues importing silver at this pace for a year, they will essentially have imported all the silver that's produced in the world this year. So what's every other country going to do? And keep in mind, silver is not just an investment. It's also used in industry for electronics, solar panels, you name it, right? So that to me seems like a massive level of supply and demand. I'm sorry, I said it backwards. The massive level of demand and supply simply can't keep up. So we will see if that pace continues. To put that in perspective, this is a chart of what we were just talking about expressed in dollars. So this is over $1.7 billion of silver that India just imported. They have never, ever, ever imported that much silver. Right. Ordinarily, I would say on average, just eyeballing this, it's probably around 200 million, probably something down here. There's a lot of months that are zero. And this is over, 1,700 million. So, I mean, this is roughly 8 times their normal purchase. So that's huge. That's huge. Meanwhile, silver stocks are plummeting. This is not mining stocks. These are stockpiles. The stockpile of available silver on the exchanges, right? They are plummeting. The LBMA silver stock hits a 6-year low, signaling a tightening market. So the silver is disappearing off of the exchanges. So there's no timeline here, but I actually have it in this chart. This is the same thing we were just looking at. So you can see here, as of 2022, pretty much a pretty steady decline in the amount of silver available on the LBMA exchange. And it's dropping. I mean, keep in mind, this isn't zero here. This is 800,000, but this is about, it's not quite 1,200. This is maybe 30%, a 30% decline in 2 years. So again, if that pace continues, I mean, that is a pretty dramatic pace. Like if that continues, then in like 5 or 6 years, there could be no silver left on the exchange. None. I mean, where are they going to get it from, right? India is importing it all. So 5 or 6 years, there could be a massive shortage of silver, right? And then, well, I mean, gradually, then suddenly, okay? Gradually, then suddenly. And also we have a chart of gold stockpiles here, a similar trend, but not as dramatic. So again, roughly 2022 going down. This is maybe a 10% drop in 2 years. So it would take maybe 20 years to sort of run out of gold, but we obviously feel the effects of the pressure much sooner, right? Prices already moving up for both these assets. Okay, another thing that's happening in China to be aware of is there is so much buying. There's so much buying in China, not just from the central bank, but from retail investors, that they're actually putting limits on how much people can buy. So the Shanghai Futures Exchange has imposed transaction limits on gold and copper futures to control recent trading price risks. The daily opening position limit has been set at 2,800 lots for gold and 2,000 lots for copper. Probably nothing. Okay, so what's going on here? Well, according to somebody on Twitter here, they said they talked to some people in China, and this is what's happening. One of the exchanges in China is a paper market. Another exchange is a physical gold only market. Okay, so again, we have that dynamic between paper gold and regular gold. The Chinese are imposing transaction limits on the paper market because they don't want the paper gold market to dictate a speculative paper gold price to the physical gold market during a FOMO buying frenzy. Okay, because of course the two prices are correlated. This might push even more liquidity into the physical gold only market in the long run, because the limitations are on that paper market. So if you're limited in how much paper gold you can buy, you might move to the physical market and take physical instead. Meanwhile, gold contracts volume should decrease at the paper exchange. So something to be aware of. This is fairly new. We'll see, but those incentives are probably going to drive more people to buy physical, and there's a limited quantity of physical. I mean, yeah. All right. TF Metals report says Shanghai buys physical, COMEX sells paper. Which side do you want to be on? Again, look at this. This is Shanghai buying the physical, driving the price up, tons of buying pressure, and then COMEX selling paper, sell, lowers the price. But again, the type of manipulation that goes on with these exchanges and with all the paper gold and paper silver, it's temporary, right? It can't go on forever. So which side do you want to be on? It's a simple question. Do you want the paper stuff or do you want the real thing? And one other reminder here. I know you guys know this, but it's good to remember. Remember, it doesn't matter where the physical buying is taking place. It all helps empty the COMEX and LBMA vaults. Beautiful. Doesn't matter who in the world is buying the physical. There's a limited amount of physical, right? Boom. And finally, Tavi Costa reminds us about the demand case for silver. Silver is on the move again after another important reversal followed by the CPI report. This diagram sums up well the demand case in today's environment. Yes, it is an inflationary asset. Yes, it is part of the green revolution. All these green energy technologies, EVs, everything, they all require silver. It is historically undervalued. It is a monetary metal. Boom. There's a huge demand case for silver. And as we've pointed out, supply is dwindling. It's dwindling on the exchanges. And a lot of people don't know this, but there's a lot less silver than everyone thinks, right? There's a lot less silver than people think. Gold is everyone's first choice historically, but when retail run starts and gold is gone overnight, silver will be next, and silver will be gone in the blink of an eye. So I like this graphic. Here's what it is. This big cube here, this is how much silver is above ground, okay? Above ground. But the vast majority of it is used in stuff, equipment, electronics, machinery, art, jewelry. It's like used, okay? This tiny little cube here is the amount of silver that is tradable that you can buy and sell. Whereas here's the comparison for gold. So of the above ground gold, obviously there's less gold above ground than there is silver, like we all know that. However, a fairly large percentage of that above ground gold is tradable, right? So that's why this cube is almost as big as the other cube. However, look how tiny the tradable silver cube is. It's much smaller than the tradable gold cube. So there is a lot less silver than people think. Silver will be gone in the blink of an eye. I don't know what else to tell you guys. It looks really good for both metals. I hope you're well allocated. Thank you so much for tuning in today. Stay safe out there, and I'll see you soon.